more than 2%. Here now, Steve Forbes, Forbes Media Chairman. And Steve, it's always great to see you, but even better when you're on set with us. Welcome.
Good to see you. Thank you.
Let's talk a little bit about the economy and what the stock market, at least, is seeming to weigh now. The Fed, broadcasted that 2023 is going to be challenging. And I'm not really sure that that was a new message, but that rates will continue to go higher and people will lose their jobs. We also saw that tick down in retail sales, which indicates the consumers kind of running out of steam a little bit too. Your thoughts on where we're headed from here?
Well, the markets were hoping until this week that the Federal Reserve, they might raise interest rates a little more, try to trash the economy a little more, but later in the year they would relent. And so they looked to the future and saw maybe sunny days in the second half of next year. Let's get in the market now. A lot of bargains around. Well, it turns out Jerome Powell was actually speaking the truth when he said in August there is going to be, he said in Fed speak, you have to translate these things into real English, but there's going to be a downturn. A lot of households are going to be hurt. Households are already being hurt. I don't know when the economic theologians will declare a recession. We may get a nominal increase in the GDP this quarter, but next year there's going to be definite slowdown. And the Fed wants that. They want more unemployment. They want wages not to grow. They want that's the only way they know how to fight inflation, even though the definition of inflation is lessening the value of the dollar. So stabilize the value of the dollar. You don't have to put the economy through the ringer to do that.
Right. And it's interesting because I really paid attention to what he said in Jackson Hole. That was the speech you're referring to in August. And he basically said, as I raise rates, the unemployment rate must go up. And he broadcast that in the statement the other day as well. And so we're looking at people having to lose their jobs in this country. As a matter of fact, reports indicate that Goldman Sachs now laying off 4,000 people from its workforce. That's roughly 8%. It's been trickling in, but I think it's going to start to roll in more in earnest after the holidays.
Yeah, and the Goldman thing brings up a very interesting situation. Federal Reserve and other central banks have been deliberately suppressing interest rates for years. And experience shows when you depress interest rates, what do you get? A lot of M&A activity, merger and acquisition activity, companies buying each other. You don't get so many of the new IPOs. And so this is when the rates start to go up, money's no longer free. Guess what happens?
Their deal flow.
Their deal flow. So they had a false boom. But what the Fed is doing is not ringing out false booms. What they're also ringing out is legitimate people going about their business. So it's like you have one little problem and you're going to blow up the whole house because you have a mouse in one part of it. They want to blow the whole thing up. They want the economy to be depressed. That's why when they say soft landing, that's Fed speak for, we want you to be less well off. We want to make people poorer. And unfortunately, other central banks are following that. So you see it in Europe. You're going to be seeing in Japan. China says they're going to grow this year. Good luck with that, even though they're letting off a little bit on their crazy COVID lockdowns. Not a good world. And I think that's going to actually do, maybe the markets haven't factored this in yet because the Fed doesn't even know it yet, is that later next year, they're going to have, the central banks have to get together and start to try to stabilize currencies because you can't have this kind of crazy volatility and all the economies crashing together. So they might actually do something sensible, which would be, wow, that would be sunshine.
Yeah. What do you make of the latest data on retail sales? Because we do know that consumers, they had a lot more money to spend during the pandemic. They had saved up and then they were getting these stimulus checks and whatnot. And so they were putting that into the economy. That's partially what fueled inflation. Now they've dwindled down on their savings. And there's another report that indicates 63% of people are back to living paycheck to paycheck. And you see them spending less out in the economy. I kept saying there's going to be a tipping point where this is bound to happen. People can't just spend and pay higher prices for everything forever. It seems to be starting slowly, but happening.
Yes, and what I think you're going to see even worse is when the season is over, the holidays are over, and the bills start to come due. Remember, people have been suppressed for a couple of years. They wanted to really do something again. Now they're finding out they can't do it. Savings rate is now rock bottom. Lowest it's been in decades, 2.3%, and headed lower. All those extra savings they got by piling up the money during those COVID payouts, they're being run down, and it's hurting low-income people. Credit card debt is starting to go up again, and with interest rates rising, and with interest rates rising, financing that debt's going to become more expensive. So yeah, it's a grim time ahead. I'm just surprised it took the market so long to recognize the government is trying to engineer a downturn.
Yeah, and I agree with you. I mean, I thought the handwriting was pretty clear on the wall, but then the markets got ahead of their skis, but they certainly seem to correct at least a little bit the last couple of days. So we'll see where we go from here. But this is a hard time for layoffs heading into the holiday season and a hard time for people to feel pinched.
Well, it is. And one of the crazy things is years ago, you didn't do layoffs until January.
Exactly.
Get through the holiday season instead of slamming people right before Christmas or Thanksgiving. And there's going to be political repercussions on that.
Yeah.
And it's going to hit both parties.
Steve, always great to see you.
Good to see you.
Again.
Thank you.
Have a wonderful weekend.